Now, joining me to take a deeper dive into these topics and to give us a broader scope of how markets are reacting, we're happy to be joined by Peter Schiff of Euro Pacific Capital and Todd Horwitz of Bubba Trading. Thank you both very much for being here. So, Peter, let's start with you. Gold and oil now are spiking for very different reasons. What do you think is the better hedge right now to these geopolitical crises such as Iran, gold or oil, or maybe just simply U.S. Treasuries?
Well, first of all, both gold and oil were moving up before the recent Iranian incident. So I think those trends are simply continuing. I think there is a higher risk premium now being built into both gold and oil for a good reason. And I think that risk premium is going to be there for at least the remainder of the Trump presidency, if not longer. But I think what's really driving, particularly gold, but oil to a lesser extent, is the Fed. It's monetary policy, it's inflation, it's the return to QE and the rate cuts. And that policy is going to continue. So I think both crude and gold are going to continue to rally. But as a hedge, I would favor gold over black gold.
Now, Bubba, let's take a look at what we call digital gold. Bitcoin is now also drawing bids amid heightened geopolitical uncertainty. Right now, tensions have escalated over the weekend with Iran's supreme leader, Ayatollah Ali Khamenei, promising revenge and President Trump warning Tehran against retaliatory actions. Now, Bitcoin is quite popular in Iran. They have been quite popular ever since last year. Citizens have actually turned to Bitcoin to try to evade U.S. sanctions on the country. So how will this escalation affect Bitcoin, and how high do you see this pushing?
Well, you know, we're still significantly from the highs. I mean, listen, we're at 7,500. We were at 20,000. I mean, the one nice thing about the cryptocurrency is it's unrelated to the Federal Reserve. It's unrelated to central banks. It's not manipulated by them. And you can't carry out a ton of gold out of a country if you want to leave. Versus if you have digital currency, you can take it with you. I think it probably goes back to 10,000. I think probably at someday it makes a brand new high. I do believe that the digital currency is the wave of the future. I think that's the wave of beating the Fed and all the central bank manipulation and things that go on throughout the globe. So again, I think it goes higher. I mean, I'm sure at some point we'll make a new high here. Now, whether it'll be Bitcoin or one of the others, that's the real question remaining, is which one's going to be the major player. But at the end of the day, I believe that that is the way of the future, where we're going to see digital currency take over, not totally take over for gold, but it's going to be in conjunction with gold, especially, again, if you want to exit a country, you can't do it with a lot of gold in your hand.
Now, Peter, do you agree with that? It's going to be digital gold, Bitcoin versus actual gold?
No, first, Bitcoin isn't digital gold at all. I mean, certainly people that are trying to market Bitcoin and getting other people to buy it, if they have a lot of Bitcoin to sell, they want, to market it as if it were digital gold, but it's not. Look, yes, Bitcoin did rally on the coattails of the gold rally, just like it did not too long ago when the yuan broke through 7. I remember gold and Bitcoin both rallied, but Bitcoin quickly surrendered all of its gains, yet gold held on to its gains and continued to move higher. Look, gold is being bought as a hedge by investors. Bitcoin is being bought as a speculation. The speculation is that other people might buy it as a hedge, but nobody is. It is not a defensive asset. It's not a safe haven. Bitcoin is probably the most risky asset you could buy. And you don't hedge yourself by buying something that has more risk than what you're hedging. You have to go to something with lower risk, and that's gold.
Now, why would you say it has more risk when it is actually less volatile than many of the fiat currency that's currently in existence?
Bitcoin?
Yes.
Bitcoin isn't less volatile than anything.
It is less volatile than the Turkish lira. It is less volatile than the Iranian rial.
It certainly is less
but
volatile.
It's not less
certainly a safer haven. Peter, listen, you have to. Gold is great. Okay, gold is great, but so is the equity market. Listen to what really goes on. I mean, equities are up 30 times. But gold is up 15 times. So. You
can't hedge. You're not going to hedge the stock market by buying Bitcoin. Bitcoin is likely to go down more than the stock market.
You're not going to hedge the stock market by buying gold either.
It has a different alpha.
Yes, you can. Gold is a good hedge against inflation,
against
You can't
hedge the stock market by buying gold. You'd be broke if you tried to do that every time. I mean, gold is just a hard asset like anything else.
How is that true?
Okay, we can argue about this a
Look at the
different
prices. Go back in history.
It started.
We can argue about this a different time. We'll definitely do another segment on this.
You never studied it.
But let's turn to Bubba now. Let's turn to the actual conflict at hand. Let's talk about the actual wide-ranging implications rather than the assets. So let's take a look at where we are now. We are more interconnected and globalized than ever before. What kind of global repercussions are we looking at aside from just the immediate spiking price of gold or oil or Bitcoin?
Well, I don't know that there's any major repercussions going to happen from here. I think when you look at the price of gold, gold has rallied, and no question was going to rally before this. As Peter stated earlier, gold was already rallying long before. I believe oil probably hit near its high of where it's going to go. Now, again, I'm long oil at the point, but I'm a little bit nervous here. I assumed it would hit the Saudi Arabia drone bombing highs of September, which we have now done so. Yeah. I would not be surprised to see oil fall apart from here.
Now, Peter, you'll have your chance to answer this as well.
Yeah, the big problem for the U.S. right now is we're more dependent than ever on foreigners to finance our deficits, our trade deficits, and our budget deficits that are going through the roof. We need foreigners, in the dollar, and this, threatens that. I mean, again, America is flexing muscles that it really doesn't have, threatening sanctions against other nations, and I think there could be a repercussion that would really, hit us where it counts, and that's in the wallet. Because if we get a move out of the dollar, we're not really seeing a flight into the U.S. Treasury market. We didn't see a move up in the dollar as a safe haven. It was just gold. And I think if the dollar really starts to fall, that's going to accelerate the move up in both gold and oil, but create a bigger problem for the U.S. economy as consumer prices and interest rates rise into the next recession. And if we end up in some type of war, an actual war in the Middle East on top of a recession, well, that's just going to, exacerbate all the problems.
And Peter, right now the Middle East is in the spotlight, but let's not forget about China. While China and the U.S. appear to be signing a phase 1 deal on January 15th, The Economist actually had a different take, saying that the planet's, quote, biggest breakup is underway. Sides are now being picked. So what is this about?
Well, remember, Trump was never able to deliver a substantive trade deal with China. I said this from day one. Phase 1 is not a deal. It's really a surrender. It's a cop-out. It's a way for Trump to, kind of save face going into the next election by pretending he actually accomplished something when he accomplished nothing. I mean, the whole Trump presidency is really pretending things have happened when all we've done is continue the bubble that Trump inherited from Obama. It's bigger than ever, and I think the bust is going to be much bigger than ever. And again, that's another reason that people should be loading up on gold. And, gold stocks have barely moved. In fact, they're even down a little bit this year, despite a $70 rise in the price of gold. So gold stock investors are very cautious. They don't trust this. Even though gold stocks beat the S&P last year quite handily, they beat the S&P in 2018. I think they're going to beat it again this year. In fact, when Trump finishes his term, we're going to find that gold stocks were the best performing stocks of the Trump presidency. Very few people expected that. Nobody even realizes that's going on. But this is another reason to really load up on not only on just gold, but on the gold stocks, which I think will deliver even bigger returns.
Well, we'll argue about gold and digital gold next time. Peter Schiff and Euro Pacific Capital and Todd Horowitz of Bubba Trading. Thank you both for your time.